And we continue with Thorsten Langheim, who heads our group development function, and who many call our living legend. So Thorsten needs no introduction, I think, to this group. He will talk about our portfolio, and he will talk about cows, as part of the portfolio farming activities. And with that, I would like to welcome Thorsten on the stage, and he will be followed straight by Christian, then we have Q&A.
Thanks, Simon. Alrighty. When I just switched into this gear a minute ago behind the stage, reminded me of being a soccer player 20 years ago. When you fly away for a major game, then you obviously swap into a kind of team gear. I kind of like that, Tim. Reminds me a little bit when Bayern Munich flies to Aston Villa. But next time, Tim, I would appreciate if we have the lizard leather jackets of Jensen Huang, so that we are a bit more trendy. But it's a good bridge from my love of soccer to what we have here as a summary of the key messages. I want to leave you with 3 buzzwords that I will repeat at the end, and that's what you should take away from this session. The first buzzword is Kaiser Franz, Franz Beckenbauer, the famous German footballer. The second buzzword is Jerry Maguire, and the third buzzword is Heilbad, but no Landgrab. So what I mean by that is that, first of all, we are certainly, since I'm here and since I look at this company, at the best position ever. Don't want to repeat what is on here, but we have exciting times in front of us, and this is not coming out of an accident. And that's what I want to explain a little bit with you, with the kind of notion of Kaiser Franz, because it was blood, sweat, and tears over the last 14 years. And there's a saying that is, luck is a dividend of sweat, and the more you sweat, the luckier you get. Or if Tim is saying in the Monday morning meetings of our board, the more you guys sweat, the more dividend the shareholders get. And I give you a little bit of an impression what kind of journey we embarked on when Kaiser Franz appeared on the scene. You know, Tim became CFO of Deutsche Telekom in 2009. And Robin, who I respected a lot, an analyst at Bernstein in 2010, recognized the change at Deutsche Telekom on which we embarked. She said that a lot of changed at DT versus France Telecom. DT announced that all top management team is based on a remuneration that is obviously checking how APS is doing. And he started to talk about ROCE, a word that not a lot of Deutsche Telekom people knew before he came CFO. And he said, Thorsten and team, we need to run the portfolio on a ROCE logic. And he also said, guys, we need to invest in the company to align interest. And one really nice stat that I got from Hannes, which I think should give investors a little bit of the feeling that we are sitting in the same boat, is that this management team is actually owning a lot of shares. I can tell you that I think it's 50 to 60 million of share ownership that this team has. And I personally own a lot of shares, so I really care about our share price. I was a very happy camper yesterday when for the first time we broke the 27 euros. And every decision that we take, major decisions, always keep this in mind. Of course, we have more than just shareholders as stakeholders, and we have to cater for different constituencies. But this is certainly very much high on our mind. If I looked at this old analyst note from Robin, you recognize a few things which I find quite fascinating. First of all, she recognized that things are changing. Second, DT was trading at about 13 times PE. Yeah, I will come back to that in a minute. And our market cap was 44 billion. And then a lot of things have changed. By the way, when Tim became CFO, DT wasn't a kind of Heilbad. It was a company that was under significant stress. We had a lot of portfolio companies that were under significant challenges. Look at TMUS, they lost in that year 2011 2.2 million customers. Or our position as a mobile operator in the UK was under threat because we almost halved EBITDA. We had a lot of earnings warnings in that decade, and we had a low share price of almost €8. And then we started working. What you see is the outcome of all of this, which is kind of fascinating. But what you have in the middle are the blood, sweat, and tears that it took in order to improve this company to potentially to have the best portfolio in the sector. We started as number 4, and we are now at the number 1. By the way, we did this in many different locations. We did this in the US as well. We started at number 4, and now are we the number 1. And it was very important that we started at the beginning of what is our metric, what are we looking at, how do we want to shape our portfolio. And the few things that you always hear our team talking about, for example, Srini yesterday, market structure is very important to us if we look at portfolio decisions. Regulation is very important to us if we look at portfolio decisions. And trying to get a good sense of where a market, a team, and the NATCO is moving to drives our decisions. And we are very rigorous about this approach. We are not emotional about companies. We are not dogmatic. We look at ROCE, we look at EPS the same way you are doing it. And I don't want to dwell too much on the things where we had a wonderful track record. Of course, we got some significant bets right, but I also want to highlight a little bit of what is a kind of phenomena, especially in this sector. A lot of things go wrong. You've seen a lot of competitors of ours that have lost a lot of money in M&A. When I started as a young banker, you know, you kind of get a tombstone for a deal, and obviously after now these 30 years and aging, my office is busy, is very filled with these tombstones. But I tell you what, I have some colleagues where some tombstones are suddenly disappearing. Yeah, and that is something that you have recognized. And I just recently read the broker note of Craig Moffat, a visit to the doctor with the famous John Malone. I every time read something if he's saying something. And he said something about a competitor in the US who said, we may not be the smartest, but we have lots of money. So I think the best thing that we have done in our past is we said no to a few things. And that demonstrates you a little bit that also in the future, we try to avoid car crashes in this industry. It's very difficult, and I have a lot of respect for my colleagues in the industry, don't get me wrong. It's very difficult to predict cash flow in this industry. Regulation can change, market structure sometimes changes. People are behaving irrational if they are with the back to the wall. So we basically said no to out-of-footprint acquisitions. We look on a ROCE basis, is that premium justified in order to take a company in a different jurisdiction? And you haven't seen us doing this. We said no to major content and media acquisitions. We strongly believe in the aggregator model. And you know, if you look to the US, how much money has been destroyed by others going in a different way. We said no to adjacencies in the consumer side. We have built DT Capital Partners in order to invest in certain selected areas where we wanted to gain knowledge. I will explain a little bit what I mean by that. We have not wasted money in these areas. Actually, we gained some money, but what is even more important, we gained some strategic insights and some ideas of how to develop our portfolio. BT is obviously our weak spot in terms of our track record, but keep in mind what we were doing in that year was merging everything everywhere into BT to create the number 1 a company in the UK on mobile and broadband with a strong idea that this may become an FMC company, an FMC leader. We have not fully taken over BT at this moment in time. You have not seen us increasing our stake in BT at the time because we looked over the years at regulation, market structure, and politics. And therefore, there was never, for us, the conviction that we wanted to go bigger. But it was a wrong judgment call at the time. We should have kept EE under our ownership. We sometimes, I would say, we got partly lucky, but also partly it was a lot of work to figure out what is a moment in time when we want to divest T-Mobile Holland, or what is a moment in time when we want to divest our partner on towers, and we got it right. Of course, sometimes you can get it wrong. I'm not a predictor on interest rates, but the good thing is we always go in M&A situations for strategic optionality. We have a lot of discussions. We don't just focus on one outcome. We have many different outcomes. And then we can strike and have that prepared for many years. That's the reason why it's also a bit awkward for me to speak to you today, because you want to have guidance, and I cannot open my kimono and say, I'm working on this, that, and that. Of course, we cannot do this because we don't announce M&A, and you never know what the outcome may be. But this is our clean sheet here. And this gives you an indication that what Kaiser Franz, our Tim, brought to this company is a mantra. We look at ROCE, we look at risk return. This is not alien to us. We look not on a first comes first basis. We look at forced rankings. That's how we do about investments. And so today we are the rock in the storm, and we are uniquely positioned. And I really can say that at the last Capital Markets Day, we obviously had a big cow on the ice that we couldn't really disclose. But this time I can clearly say we don't have a cow on the ice. We are very in a strong position. And the thing that we now have is great responsibility to invest the excess capital that we now have generated via our past decisions and past actions very intelligently for our shareholders. And that's what we want to do. So let me quickly give you a bit of a brief snapshot of what was on our mind over the last 3 to 4 years, and that brought us actually to 27 euros. And I remember that at the time when we had these Capital Markets Day, I promised Tim, I think we are 20 euro stock, and he was hunting me for some significant period of time, and actually we needed a deal with SoftBank in order to prove that, which was a capital increase while we were at 17 euros for 20. Show me a capital increase at a premium. But we did it. At least SoftBank was convinced that I was right at that moment in time. So what was the cow on the ice? Look, for us, the US is not a nutco. It's strategic to all what we are doing. And we are applying a lot of things that we learned here in Europe. This has a strong stewardship, not to the operations and the day-to-day management, but to everything that has to do with capital allocation. Keep in mind that we were the ones that basically standing in New York at the ashes of the transaction with AT&T in December 2011, and we really had a hard time. Of course, we had a break fee, but to do this and then to do a turnaround of this company at a moment in time when we couldn't even afford the iPhone, and I remember the discussions that Tim had with René over this, our other Franz Beckenbauer, that was really tough. So just looking at this is strategic to us. It's not only financially very attractive, it's strategic to us to keep and have control. It's a NASDAQ registered controlled company of ours. It's enforced in the articles of associations and the bylaws that we control this company. And that's the reason why when SoftBank indicated that they want to focus more on AI, we thought we want to also, beyond the proxy, be in a position in 24 to have undisputed control over this company. We learned, obviously, some lessons out of the Vodafone Verizon saga, and therefore that was priority number one for us. And like always, Kaiser Franz came and said, but I want to have it all. Typical Tim. He said, look, I want to have that we achieve the 50%. I want to still invest significantly, and I want to accelerate our fiber investments in Germany. We also want to deliver to 2.75, and I will pay an attractive and affordable dividend. So we obviously had to come up with something because the 20 billion were not growing on trees. And so we took the challenge, and the challenge was as depicted here on the right-hand side, that our leverage was at 3, and we wanted to come down to 2.75. We knew that SoftBank wanted to exit. We had a strong conviction that the stock price of TMUS will appreciate. We had a strong conviction in the deal, by the way, in Sprint. Not all and everyone. Now I have a lot of people who said, oh, wow, yes, I was clear. But at the time, to be honest, it was a very bold move. Now it looks like genius, but it took Tim a lot of time to convince a lot of people that this is exactly what we have to do, and that the power of this 2.5 spectrum that is now driving this company, and the 40 and 30,000 towers that you combine, that this network leadership that you now have, coming from being the best value company and the best brand, is a kind of winning proposition. That was at least clear to the kind of inner circle here, but at the time it was kind of disputed and heavily discussed, because the debt that we would take on board and the potential skeletons that may be there on the Sprint side were all over us. Obviously, we had also M&A execution risk. You never know. Yeah, suddenly the world is changing, and then you cannot do a deal. And obviously, I knew at the time that we needed Holland and towers in order to generate the funds. We had a lot of discussion. Should we do an IPO of the towers? And I was fighting this. And I said, look, I think that's the best way forward. And I will explain why this now, at hindsight, has worked out. And then obviously there were also some spectrum auctions coming our way, and we knew that Malone once said, we may not be the smartest, but we have a lot of money. You see what people have spent on C-band, and we want to defend our network leadership. This should not only be for 3 or 4 years, we want to have it for longer. So this was a challenge. And then how did we resolve that over the last 4 years? So you don't wake up one day and say, I just sell a company. What we do is different. We take it on, we improve it, and then at the right moment in time, we find a buyer. We don't exploit him. I think if you talk to Apollo and Warburg today, they still enjoy what we have achieved together. So what we did in Holland is, and it's kind of interesting to see, there are a lot of, this is the smaller sister company, call it, of T-Mobile US, because a lot of things that we have applied here, we're also applying in the US. We picked the best management team. I think we had a very good management team, and still there, still delivering also for the new shareholders. And we got them into a virtual equity scheme. Otherwise, you don't get the best breed for a turnaround, which clearly Holland was in 2016, at that moment in time, into the company. Obviously, TMUS management is highly incentivized vis-à-vis the success of T-Mobile US if you look at their compensation and how they are being compensated. Pillar number 1. Pillar number 2, we consolidated in the market. You know, market structure, Srini. We bought in Simple, in MVNO. What did we just do in the US? We acquired Mint Mobile. We did an in-market consolidation, Tele2. What did we do in the US? It was Sprint. And I can tell you, especially the Tele2 deal, I'm extremely proud that we got this through without remedies. This is what I mean by blood, sweat and tears. It took us a lot of work, and I spent so much time in Brussels at the time to convince that this is actually a good case. So that was the first one that we delivered in 22, delivered about 6 billion. And there were 2 other aspects to it that I want to share with you. We also separated the towers before we sold this company for almost 9 times EBITDA. By the way, the towers have been acquired by Cellnex in a combination with DT Capital Partners. So DT Capital Partners has a stake in those towers. And then we did something together with KKR. You may not know that, but we own a part in ODF, which is Open Dutch Fiber. Who's our partner? KKR. Just look at the blueprint of this transaction. It's not 100% similar to what we do in the US, but who's our partner on Metronet? It's KKR. So you see, this is how we think. This is what we do. We prune this asset. We make sure that we are not having our back at the wall when we have to sell something. When we want to sell something, we want to get top dollars for it because we want to reinvest it into something which I indicated before. Second, on towers. We had so many discussions on towers. I spent so much time with my team on the road discussing with Cellnex, with Totem, with Vantage, and obviously with a lot of financial investors. And I'm really glad to say that we picked the right moment in time for this premium asset. And I can tell you that I think we picked 100% the right partners for us at this moment in time, because they add Brookfield and DigitalBridge so much value to this asset that our 49% will appreciate significant in value, and we still have a lot of option value on this company because we have a consolidation call. So on top of it, I have other very smart people in my team who understand corporate finance. And they said, look, maybe we do some transactions with SoftBank. They have been locked up until 24, but they wanted to have earlier liquidity, and they believed on this liquidity they may do higher returns than on TMUS. So obviously we did some options trades, and in order to provide for earlier liquidity, the famous $100 stock options that we got. And second, we did a DT share swap at a premium, where we basically exchanged almost 5% in DT for 3.6% in TMUS. This was all helping us to get to 14.3 billion of proceeds and 3.6% in TMUS. And if you all put this together, then we finally were almost there at the 15.4% that you see here on this page. And if you ask ourselves how much did we pay, you see on average we paid about $120. Keep in mind, we had a strong conviction in 21 that the stock is going to appreciate. We wanted to execute as fast as possible. We locked in $120, and today, at today's share price, or last week's share price, this is significant value creation for our shareholders. And on top of it, we obviously managed to compensate for spectrum. A lot of spectrum in the US, 14.6 billion. We had then the Crown lease hit of the tower lease extension. But overall, we managed to come into the corridor as we have predicted. So going forward, now we are coming to, from Kaiser Franz to Jerry Maguire, show me the money. And obviously, we have to be very careful and very responsible of what we are doing now over the next 4 years, because we've never been in this position. We've always been someone who was looking at our wallet and said, where do we find the extra, we called it bullet, the silver bullets. Now we don't need any silver bullets. What we have is flexibility and optionality. And to be honest, I'm really excited about this, because there's a lot of stuff around us, a lot of things that I honestly believe I will not sell my shares. No, not a single one. I think I will see significant personal wealth creation by being a shareholder and helping that we are moving this way. And what kind of levers do we have? I think that DT is undervalued. Yeah, Tim knows that I said that we will certainly be above 30 euros next year. And the reason is we are growing at double-digit EPS, not only for the last 3 years, we even guide for that for the next few years. And we're still trading at 13 times PE, which is kind of, I think shareholders do understand that we care for them. We increased now the dividend. This obviously is putting it higher and higher for the future. And then our stock, for some reason, moved down from 65 billion to 15 billion. And I think for Dominic's business, if we just look at this, with 4% our EBITDA growth, how fantastic this business is. This alone is a KPN in my view. You basically get the rest at Deutsche Telekom almost for free. And then we have something where we have to work on. This is the reason why this flywheel has changed. Global scale AI. We have 300 million paying customers. If not us, who else would figure something out to utilize the scale? And that is the key task for this team, for our team here ahead, to figure out what we do about this beyond pure procurement. We still have the best premium asset, I believe, the tower asset in the German marketplace. I show you why I believe it is a premium asset. And as I said before, a few years ago, when TMUS was the Kingmaker asset, yeah, we moved also away from that. GD Towers is the Kingmaker asset for European tower consolidation. That doesn't mean, and let me say that loud and clear, that we are in Landgrab mode. We are in Heilbad mode. Yeah, we will participate, but that doesn't mean that we are now buying other tower cos. We still have optionality around BT. Shareholders have changed. We spend a lot of time on it. We look at it on a regular basis. And we have the DT Tech Fund, to which I will come in a minute. But to be one thing very clear, also we say that as shareholders of this company, the first thing we always start with is dividend, DT share buyback, and increasing our stake in TMUS. There we know what we get. That's our benchmark for anything that comes on top of it. And this bar is quite high because I think both offers, whether DT or whether TMUS, very promising returns if you invest your money in that. So I explained a little bit on the discount. Obviously, we can argue hours about this, whether that's fair or not fair, and whether there is actually a discount on TMUS or the other way around. But what is clear is that we grow faster and have a better portfolio in Europe than our competition. And if you would apply this metric as it was, as here, then you basically see that we are trading at about 4 times EBITDA. That cannot, something is not right in that system. And we recognize that, and that's also the reason why we actively consider DT share buybacks. Yeah, like Warren Buffett always said, you have to look at the intrinsic value of your asset, and if it is significantly higher than your share price, then you should do a share buyback. And so we do recognize this, and there the EPS grows. As a reminder, Bernstein, Robin, at the time in 2010, we were trading at 12.6 times PE, despite a kind of flattish, to be nice, EPS growth rate. Now we have a strong portfolio. We don't have any weak links. We have grown by 10% on EPS, and we are growing by 11% based on our guidance. Why on earth are we still trading at 13 or 14 times PE? So I think this in itself offers us a lot of opportunity. That's the reason why we give us some flexibility to address that, either with share buybacks or with something else. And then the US, I think the US story is not over. It's really interesting to see. I obviously had a lot of hard Schmerz, as we say in German, when we had to sell T-Mobile Holland. I spent so much time there, and I liked the team a lot. We have given the company to someone else at that moment in time when we really were getting out of the woods. It takes some years. We invested a lot of money in the network in the Netherlands. We pruned this market, developed this company into a good position, and then we had to depart. Now we have a challenger that moved into a champion. And I think Mike and Peter have been excellent yesterday of outlining what kind of opportunity this means, not only in terms of winning more market share, but moving this company to a position where even large customers are saying, this is my broadband, my telco provider. Let's talk a bit what we have done. We have done significant M&A, by the way, over the last 18 months, much more than you actually think. What you see is Metronet and Lumos. And just to be 100% clear, this is not a defensive investment. This is a so-called adjacency. But I like that a lot. Much better what you have seen in the past adjacencies when mobile-only operators had a lot of cash and try to hijack certain business models in order to broaden their product portfolio and moved into B2C or software services. Metronet and Lumos is core. We understand that. We are a fixed line provider. We teamed up with the same kind of party which we've teamed up in Europe. Well, we have high regards for KKR. They know what they are doing. They are co-investing in Metronet with us. It's for them also a big step forward. And what we bring to the table is not only the knowledge how to set up such a deal. And guys, keep in mind these kind of deals, and we have done now many of them. It's not only Open Dutch Fiber, it's IFM in Germany, it's in Austria. This requires a lot of knowledge. I'm very happy that I have my team, because the MLA and the kind of provisioning, the kind of what you do if someone is not delivering in time while you are delivering retail, the devil is in the detail. And I think we contributed greatly to what is done there. But on the other hand, I also can tell you, I was kind of shell-shocked to see the economics in the US market. It's if you compare that obviously to what we are doing here, where you see lower capex, much higher ARPU, and much higher penetration. Wow, that is interesting. They showed you yesterday 20% IRRs. That is not US marketing. It's really what you see there in these markets. Obviously, we'll see over the next 3-4 years, because a lot of people are now in land grab mode. Yeah, but I think the way we have done it in order to counter an adjacency is a very smart one. We've not bet the firm on it. We've done it with partners, and we bring to the table what I think is best from our perspective, which is the brand and the shops. And that will help us on retail. In-market M&A, everybody knows, everyone can come to me and say, I want to do in-market M&A, and my door is wide open. Yeah, USC, we'll see whether this deal comes to the finishing line. Would be a fantastic transaction for us. I also think very much needed for USC. And Mint has really helped us on digital and prepaid. And we will see that these things, although they are only on the net debt side, but not on the benefit side and EPS or free cash flow, will significantly boost our trajectory. So I'm very positive on the US. And yeah, there may be more. Yeah, as Mike said, we are not working on anything right now, but we are already looking at opportunities on a constant basis. We wait for the right thing that comes our way. Will be very interesting to see. You saw that Verizon bought Frontier. Do me a favor and have a look at the proxy filing. I just don't say any more like that. Just have a look at that time. We are not the guys who are rushing into something and then taking decisions. For us, it takes a lot of time. We had our first workshop, Hannes, you have to remind me, I think in 22, 21 was the US guys on fiber, and how we do this, and how we set up deals, and what is important, what is not important. And it takes a long time for us to take a strategic decision. GD Towers, my little favorite asset in my little portfolio here. It's a fantastic market for a tower company. Hard to say for Srini, but yeah, there is some competition in that market, and Srini is investing a lot of money, I think, very wisely, and he knows that he has us on our side, on his side. And the good thing is this company can perform. You've heard a lot of noise about that some parties couldn't get towers in time. We deliver. Just look at this build rate, 5,000 over the last few years and 4,000 for the next year. So we can build at scale, and there is demand. What is even more important is our let's say, competitive advantage. We have 31,000 towers in Germany, while Vodafone has 20 as a comparison. Or we have 12,000 ground-based towers in the rural regions, while they may only have 1/3 of that. That is a source for co-location revenue, and that is coming in. And as we saw after Vodafone's kind of desperate move on 1&1, now everybody is striving for network differentiation and network leadership, so they are all knocking on the door, and that is driving what you see on the right-hand side, the outperformance of our initial business plan. I also have to say I'm very proud that we have Brookfield with Sikandar Rashid and Digital Bridge with Mark Gensi on our side. They have created tremendous value for us. If you look at Digital Bridge, they are street fighters. They know what they are talking about. Our operational efficiency, what we've learned from them and their people on our team here, is significant. And then on Brookfield, we will make a few announcements around our corporate structure of this company. About the diligence of looking at numbers and trajectories has benefited us as well. And that's the reason why I think we are truly and utterly a 1 billion EBITDA company fairly soon. And if you just look at this little company here for a second, I bet this is a DAX 40 company if this would ever go IPO. Don't forget that it's still 49% ownership of Deutsche Telekom. We are currently carving out our Eastern European towers, roughly 12,000 towers, roughly about 120 million of EBITDA. We are using this as a chip. It's not that we are going to contribute it into GD Towers. It's something that we have separate that we will use in the potentially upcoming tower consolidation. Of course, I'm still a believer that I think we should have a stake in a company that is the leading tower co in Europe. I don't need a majority, but we want to have a significant stake and a significant say in order to protect our network leadership in Germany. But we are also very willing to propel and improve the operations of our tower co. There are large tower cos in the US, and I think between Cellnex, Vantage, Totem, there should be some form of combination over the next few years. I always joke that Cellnex is a little bit our sister company. I learned so much from Tobias in the past, the former CEO. We like, obviously, Marco Patrano a lot, the old former Telecom Italia CEO. This is a great company, and we always look up to them, what they are doing. And on the other hand, you have Vantage and you have Totem. We'll see what's going to happen. We have strategic optionality. If you want to have the leading European tower asset, I think you cannot avoid us. And so we will play a very important role in this potential consolidation. DT Cap, the other thing I'm responsible for, is a very nice thing. I inherited T-Venture in 2015, 2016, which was not generating great returns. And we started on a journey because we wanted to invest and make money. And also have a strategic benefit, because otherwise we could have given the money to another fund. And to be honest, I learned a lot. Some of the value creation you have seen here is also thanks to the investment that DT Capital Partners have done. First and foremost, Tim always said, if you start with that, I don't want to lose any money on this stuff. And second, let's clearly define where we want to invest. I don't want to invest in something very broad away from the core. So we said infrastructure and growth equity. And what you see here on the right-hand side is all this stuff that our BTB people were talking about. We invested about 900 million right now. We got 600 million back, and the value of the portfolio is about 1.4 billion. Where did I learn something from it? First thing that we did was a joint venture with Cellnex to acquire a part in the Swiss towers in Switzerland from Sunrise. That's the reason how I got to know Tobias, Alex, the great team that there was at the time at Cellnex. And we obviously also co-invested with them in the Dutch towers. I learned a lot about the tower business by talking to these people, to the best in the market. And that's the reason why we have done what we have done around our tower business. That's the reason why we've transacted. That's the reason why we carved it out. That's the reason why we set it separately. Second, we have a stake in Community Fibre in the UK, which gives us a good sense of what is happening in that market on the Altnet side. We have a stake in ODF Fiber, and this led to a few things, like, for example, in Germany, our fiber deal, or the US fiber deals. We learned a lot via these transactions. And data centers, we just discussed that. We have a stake in Mindcubes, which is sovereign governmental contracts, very interesting, very much ahead of the time. And we are working on Project Excalibur, which will be data AI centers. Not to be clearly said, we have minority stakes in there. We partner with the best of the best in the sector in order to learn what is happening and in order to facilitate business for ferry. On the right-hand side, I just mentioned only one thing, Ariaka. We just discussed the switch from MPLS to SD1. We already invested in Ariaka in 2016. And obviously, the CEO, Vicente, the team, we had a lot of discussions because it takes sometimes for an incumbent some period of time to figure out what is really happening on the software side. And that helps to change that MPLS is not the answer for all and everything in the future. So that was successful. And now we embark again, I'm a conservative Nordic person, on something small, which is, on the previous side you have seen strategic benefit but IRR focus. Yeah, we really wanted to make money. Here, what we want to do, we still want to make money, but IRR is not prior one, strategy is prior one. We now have a team that over the cycle since 2016 has delivered in this space of investing in other companies. And a team, I also mean that we can own companies, and that is the idea here, that we nurture on the side, that are not being, let's say, overwhelmed by the big DT. You want to have entrepreneurs that still can run their company on an arm's length basis vis-a-vis DT. And that's the idea of the tech fund. We have this unique scale. There is something happening in our industry which is big, and we have a proven track record. And why don't you bring this all together? So we've allocated 2 billion. We will build this up, and then we will make investments again in a very narrow space, defining what you see here in the middle in order to improve our strategic positioning and learn. So finally, from, call it Franz to Jerry Maguire, show me the money, which you see on the right-hand side, accumulating increase, to Heilbad, but no Landgrab. I saw that in the Keval note. We are here at Landgrab and Weg, and he has written a funny note that this hopefully is not an indication that we are now using this money to Landgrab. No, guys, I promise this is Heilbad. Yeah, it's like if you take a steak from the grill, it needs to rest a little bit. Yeah, and I think we should enjoy this moment in time, and we'll figure out. We will be good stewards of your money to always start on the right-hand side with a share buyback or increasing our TMUS stake. And we want to keep the flexibility. You should not assume that we are now pumping all that money into a TMUS stake, because we may want to address the DT perceived undervaluation by us. And we will play this against each other. And if on the way there is a very compelling strategic opportunity, then we will utilize funds for that. That's how we think, that's what we do, and that's the reason why I now want to stop here on time, because there's a certain correlation. We had our first Capital Markets Day where I was present in 2018. We had a stock price of about 13. We moved it up to about 17, and we are today at 26. So 4, 7, so the next one should be 10. So the Capital Markets Day in 27, if we are then not at 37, 38, it would be a disappointment, Hans, right? So I want to stop here. Keep in mind, Kaiser Franz is still making sure that we are not making anything stupid. Jerry Maguire will come on stage in a minute and shows us the money, which is Christian. And we are in the Heilgrab, no Landgrab mode. And thank you for your time.